comes from other traders in the market. I say about like 80 to 90% of the traders in the market are wrong all of the time, especially the retail traders. That's where our money comes from, because people that lose money in the markets, somebody else has to make. That's why it's so key to have a profitable strategy, because if you know what's going to happen, let's say 60, 70% of the time with a positive risk to reward, you're going to make money consistently in the market, while other traders are consistently losing money in the markets. And there's many advantages to forex trading, like no other. You guys even have no idea. If you're comparing this to any other business in the industry, this is the most profitable industry that you could possibly ever start. Here you don't have to deal with clients, you don't have to deal with shipping, you don't have to deal with product, customer reviews, you don't have to deal with any headaches of the actual operation. For you, different tabs. It's going to create you a indices tab. It's going to create.
Hold on, which one is this?
And then you sign in. And as soon as you sign in, it's going to show you these different options of plans that they have to offer. You don't need these right now. This is just to either remove the ads that pop up or the tabs. Let's actually go in and clean up and fix all this. So we click here on Euro USD, which is obviously the most known market in the world. And then you click here C on Supercharts. As soon as you click C on Supercharts, a new tab will be opened up, and this is where you're going to spend 99% of your time to analyze the markets on trading. This is going to be a spot where everything is done. So you no longer need this first tab, so you can pretty much just exit out of this tab right here, and then you know that your watch list still remains here as well. So for right now, let's move this to the downside so we can have some moving area. So we're actually able to have this market show what we want and show the markets that we want to show. So let's actually move this to the downside, and you guys can see here these are all the different markets that TradingView has given us. So we're going to come in here and fix all that very fast. All right, so first of all, we're going to remove the stocks. We don't need stocks, so you just simply just click that. We're going to remove all of these different types of markets that we don't use. We're going to remove the stock section out of this, right? We don't trade none of this, so we don't need it, except gold, but we'll add that later down the road. Remove silver, and then we're left with our forex pairs, right? So got that, clean that up. You only have to focus on what matters. So next is these charts right here. I personally have everything set up in a very specific and precise way. So the body of the candlesticks, they have to be blue to head up, and then red for them to head down. The borders have to be black. You have to be able to identify the close and the open of the candlesticks. So we make that black. And then the wicks obviously have to be black, so you can see them happen in real time in the markets. Now, you might not see it right now of all of these black points, and that is because obviously our background is black. That's where we're going to go over to the actual canvas, and we're going to make it white. And then next we change that black background so you can actually see the candlesticks and you have a textbook style chart. You come here to the background, and then you're going to put it white. A lot of people like having a lot of different types of ways. I like going the texture route. I like going the very simple and effective route. So I have my candlesticks black bodies and wicks. Blue bodies to head up, red bodies to head down. So it's exactly how I have my markets in real time. We don't need this price down here, so simply you just double click it, you click that right here, and then you go to style, and you simply remove the volume. You don't need that. That is extremely pointless in the markets. So right now, this is exactly what my market would look like. This is how you would need to have your charts to trade like me and have results like me. So you can have the same type of market recognition once you see the market. So now that you have your USD, GBP, USD, and USD, JPY, we want to make sure you're on the right server. So as of right now, we're on FXCM server. So this is not the best server because sometimes there's gaps in the market, as you see right here. You come over here, there's a gap in the market right here, and for a beginner trader, this can be very, very confusing, and it can be, it can just cause confusion, it can mess up your trade. And you see gaps right here. So what we want to do, we just want to get onto the keyboard. We want to type Euro USD, and then here we want to go to the OANDA server. So as you can see, this is the FXCM server, and then we go to the OANDA server, and you guys can see how that gap right there on FXCM, it is no longer there because now we are on the OANDA server. So if I simply click this option right here, that is back at the FXCM server, you can see how the markets have gaps. They just look weird. Versus if, once again, if we look for the Euro USD on the OANDA server, you can see how it is there. So what we want to do is you want to come here and we want to flag that option, and you want to flag it as red. So as soon as you flag it as red, it's going to add it to your watch list after you come here and then you add it. And now to see that market that it's actually flagged, you simply come up here to the watch list, and then you just click red, and then this will be your red watch list. And as you can see, once we click on this server, now we are on the OANDA server. You can see how the gaps get filled. The market is beautiful. This is the perfect example of how my markets are. I just have many different types of markets. For example, GBP USD on the OANDA server. Pretty much just click here the red, and it's already automatically added to my watch list. We'll add AUD CAD. Same thing, we'll make sure we're on the OANDA server. Come here, we just flag it. Once we flag it, automatically pops up here on my watch list. I've done this for about 15 different pairs that I actively trade, but more on that on the video. I want to make sure you really take your first trade by the end of this video. So this is trading. Trading is where you're going to analyze the market. This is where you're going to see if the market is headed up or if the market is headed to the downside, so you can actually enter the trade with the trend of the market so you can make money.
So it's the right leg now.
That I'm going to be explaining very soon. So the next platform that we're going to enter is MetaTrader. There's MetaTrader 4 and there's MetaTrader 5. So TradingView is where you actually analyze the market. This is where you see the market and you actually take a trade based off of what that is showing. Now, where do you take the trade? Well, you take the trade on MetaTrader 4 or MetaTrader 5. There's other platforms out there, but I'd say 90% of the actual industry trade on MetaTrader 4 and MetaTrader 5. I've never used any other platform other than MetaTrader 4 and MetaTrader 5, so I recommend stick to them. It's very simple and they have things straight to the point, and it is very, very effective. And the majority of the brokers in the industry use MetaTrader 4 and MetaTrader 5 because, once again, everybody uses MetaTrader 4 and MetaTrader 5. So both of these apps are actually on the App Store. MetaTrader 4 is obviously to the left, MetaTrader 5 is obviously to the right. MetaTrader 4, so you have an idea, is like the iPhone 14. MetaTrader 5 is like the new iPhone 15, or the newest version of the iPhone. They both work perfect, just MetaTrader 5 is a little bit newer. So for this video example, I'm going to be showing you how it looks like on MetaTrader 5. But the buttons are exactly the same on MetaTrader 4 as they are on MetaTrader 5. So we're going to click here on MetaTrader 5, and the first thing, once you come in, you can see that our trade button down in the middle, this is where you can see the balance, equity, and the actual free margin of your account. For now, we're going to make an account real quick so I can show you guys how to look at this app and how to actually take a trade from it. So first, let's start off from the right button, which is the settings on the account. So what we're going to do is we're going to click all the way at the top where it says new account, which is the second to the first option. Once we click on the new account, we're going to create a new broker login, and we're just going to use the MetaQuotes login, right, just for this example purposes. So right now, we're just going to register an account. So we're going to click the top button which says register a new account. We're going to create a demo account just for this account purposes. So we're going to click that option right there. You're going to be able to fill in your first name, your last name, your phone number, 05476. That number is constantly moving up and down, and the number next to it is 1.0548, and that number next to it, the little number, is always fluctuating, moving up and down. So this is the real-time price of the market. This is the market fluctuating right in front of you. And then this is basically the difference between the spread, what they were asking versus the market. There's a whole other video on that, right? But this is just very simple. When you head over to the left of it, you can see that this is Euro USD. So Euro USD is the currency pair that we will be trading on this market right here. So if we were to click it, it would give us the option to trade it, look at the chart, see details, statistics for the depth of the market. The only button you need to focus on here is the trade button. This is where you're going to actually execute a trade on the market. But before we do that, let me actually explain a little bit more. So let's say, for example, we don't want to trade USD JPY or the USD CHN. You pretty much click the pen all the way at the top right corner. Once you click that pen, you can select the markets you don't want to trade, and then you can pretty much just trash it, right? But let's say you trash some markets for the wrong reason. You can just click on the search bar, and then as soon as you click on the search bar, you can just search them up. Again, USD, CHN, and then you just click the plus sign, and as you can see, it's back here at the bottom. So nothing's ever going to disappear on this platform. Everything will always be here on the market. So there's actually two different ways on how to see this actual currency pairs and how the market is fluctuating. And that is with the button all the way at the top left corner. And as you can see there, it pretty much shows you the symbol, shows you the bid, the ask price, and then the daily percentage. So this is a very much more simplified option compared to the other one. The other one might look a little bit more intimidating. I personally always use it just because it shows the numbers big right in front of your face, so I can see the spread that the broker is offering you at that point in time. So this is also a very simple point to do it, but both do exactly the same thing. Let's say I want to trade Euro USD. I click it, and it gives me the same exact option. Next, we have the chart option. So this is where you can actually see the charts of the trade. So for example, let's say we wanted to trade Euro USD. You guys can see here how the Euro USD chart that we were watching on TradingView, we can actually see it on MetaTrader 5. So this chart is the same exact thing as TradingView, but it's a little bit more, let's say, it's outdated. You can't have as much freedom as you do on TradingView. So this is why we trade and mark up our trades on TradingView. We actually execute the markets on MetaTrader 4 and MetaTrader 5. So this chart option, you pretty much don't really have to see it unless you want to just, take a screenshot that you're in a trade and just post it on social media and show your friends that you're making money. Next is the actual trade button, and this is where probably a lot of you guys have seen this, right? You've seen a lot of blue numbers, a lot of red numbers. This is where you can actually see your trade floating in profit or floating in loss. This is where the P&L of your actual account is, and this is where the money is in the MetaTrader platform, so you can actually execute the trades into the real market. Next is the history tab. So this is where you can see all of the positions you've taken in the past. So you can see the positions that you've won, the positions that you've lost, and the details behind those positions. You can also see the orders that you have, and then the deals, and so on and so forth. But the main button you're going to be using here is the position. Let's say you want to see 6 months worth of data, because you want to show an investor, you want to show a family member, you want to show a friend. You pretty much click the clock at the top right, and you can show 6 months, 3 months, a week, whatever you want. You can even organize it by the symbols that you want to show at that very time. And then once again, the button all the way to the right is the actual settings button. So it's a very, very simple platform to use. I've been using it for about to be 6 years now at the end of this year, and it is where you're going to spend the majority of your time when it comes to executing your trade. You're going to spend more time on actual trading to analyze the trade, because all you have to do is come into this app right here to just execute the trade. This broker is going to give you the option to actually execute the market in real time. It's going to give you the option to enter the market immediately. That is what MetaTrader does. MetaTrader is the person that connects you directly to the market. The broker is the middleman. So you're the retail trader, and then you want to card deposit, they even accept wire transfer, and I think they have added crypto deposits into the platform as well. And then third is going to be IC Markets. So IC Markets is a regulated platform, I think in the European, and is a very, very well-known platform, like let's say Binance across the world. So IC Markets is another platform that they also have MetaTrader 4 and MetaTrader 5 as options to execute into the market. I've never used them, but I know they're very, very well known. So these are the 3 trusted platforms that I recommend to use with MetaTrader 4 and MetaTrader 5. And you need one of these platforms. You have to use a broker in order to execute to the real market. There's no way that a retail trader can go straight to the real market by just connecting to it. It's not going to happen. You have to have the broker in the middle that gets the actual asking price of the market, and then you send the money to the broker, and the broker connects it to the market, and they charge their fees to make that trade be able to happen. So now we're going to actually take a trade together right now, but I'm not going to just go on the MetaTrader 4, MetaTrader 5, and just execute a trade. I'm going to actually show you guys a little bit of my strategy. I'm going to show you guys the different types of ways that you can make money trade. You can make money trading with technical analysis, with price action, support and resistance, EMA, trend continuation, all of this stuff. And my strategy is a combination of all of this. And trust me, this might sound like a lot of information, but 5.5, 6 years ago, I was at Dunkin' Donuts and I didn't know any of this stuff. I didn't go to college. I barely graduated high school.
Bro,
I am considered a
you
professional.
had hair last time I saw you.
And because I never gave up. So I'm going to teach you guys a pretty simple version of this so you guys understand.
Oh, you must be
Don't get
getting that.
intimidated by all of these lines.
Yeah,
Don't get
getting this shit
intimidated by all of these candlesticks. They're very, very simple. As soon as you understand it, you're going to have a huge aha moment. So I'm going to show you guys right now how to execute a trade on MetaTrader 5 so you can do it yourself. But I don't want you to go do it yourself without any context. I want to make sure you have an idea of what you're doing before you take this trade. But I'm going to show you guys a little bit of my strategy. So let me actually go back and dive in to show you guys how I'm going to take this trade. All right, so let's head back here to Euro USD, right? So this is the Euro dollar versus the US dollar. So let's say that we're going to buy this market. That doesn't mean you're going to buy the euro and you're going to sell the dollar. But let's say we're going to sell this market. That doesn't mean you're going to sell the dollar and buy the euro. That's not how this works. Basically, what you're doing is you're betting that price is going to go up or you're betting that price is going to go down. So if we're looking to buy this market, that means we're looking to bet that the euro is going to get stronger than the US dollar. And this is something very key to understand because this can maybe cause a lot of confusion for beginner traders. And it's very simple. You can identify whether the market is going to go up or down simply by the trend of the market. So as you can tell, as of right now, this market right here, overall, the trend is headed to the downside. You can see how this market is creating lower lows and lower highs. As of right now, it's actually bullish. This market
it's about to go
is
back up.
potentially going to shift to the upside because we have a head and shoulders, but that's a little bit more advanced in the video. I'm just going to keep it very simple and just continue trading with the trend so what a beginner can look at this market like, right? So for example, this market right here is headed to the downside. So the first thing in my strategy, and any strategy realistically, is trend. You need to know where is the market headed. Is the market headed to the upside or is the market headed to the downside? Because if you know where the market is heading, that makes trading a whole lot easier, right? It's already a 50-50. The market can only go up or it can go down. So if you already eliminate one other option, that makes the odds of you making money trading a whole lot easier. So that's why if you understand that the market is headed to the downside, you only look for sales. That makes the odds of you making money a whole lot easier. So for this example right here on Euro USD, and we're going to be looking for sell, we're going to be betting that this chart is going to be going down. We're going to be betting that the euro is going to get weak and that the dollar is going to get strong. That's what we're going to be doing on Euro USD today. Now, in order to identify that the market is headed to the downside, we're using market structure. Market structure are all of these points right here. Literally every single point that you see on this market right now is considered market structure. This structure point right here is a market structure point. This point right here is considered a market structure point. So every single point on this market is actual market structure. So market structure are all of these points up here. These are points where market is creating, also known as an elbow in the market. This is where the market shows you that it's rejecting that area and it doesn't like that zone. So this is a market structure, market structure, market structure, market structure, market structure. So people say I had to trade market structure, saying they pretty much trade markets, they pretty much trade the chart. It can be very confusing at first because if you don't know the definition of it, it could just be like, well, what is market structure? Well, you're looking at market structure is just price. Now, some people say trade candlesticks. Well, you're looking at all the candlesticks. This is a candlestick, this is a candlestick, this is a candlestick. Every single red or blue box that you see is a candlestick in the market. So yes, we trade market structure, which is the price of the currency pair, and we trade candlesticks, which is what shows us what the price of the currency pair is. You guys are seeing how I'm making such a complicated topic so simple and narrowed down because that's the reality of the situation. And the next is support and resistance. Oh, you trade support and resistance. And yes, I do trade support and resistance because it is the floor.
It's resistance.
So in order for me to enter a trade, I need to pretty much buy it at a support, which is also known as a floor, and I need to sell it at a root, also known as a resistance. So what we do is we get price that tends to use certain areas as a level of support and resistance. Let me show you what I mean by that. So a level of support is identified by an area that price is clearly rejecting from. So for example, let's use this line chart right here to identify this as a level of support. So pretty much every single time price comes to this level of support, price rejects it and then it just heads to the upside or it just decides to reject it. This is also known as a support level. So a zone that has more than 3 touches that rejects as a level of support is known as a valid area of support. So this is what it would look like at
What is
support
that?
level. So what we do as traders, and a very
Shoulder
simple and
back.
effective trade strategy, what we do is pretty much once price comes to the support area, we look to buy. I'm going to look to buy just because it is at a level of support. We have a series of confluences that add up, and that is, well, first of all, the majority of the market is actually headed to the upside. So the market is headed to the upside, and then we're rejecting this level of support. So that means the most logical thing we should be doing is buying. So that's an example of how we use support to enter a trade. But for this example, if the market is actually headed to the downside, then we need to use it as a resistance area. It's very simple. It's just vice versa. That means that price is reaching pretty much a ceiling of price, and every single time price gets back to this area, it rejects it, and then it heads to the downside. This is where we would look to then sell price because the market is no longer interested in buying, and the market is headed to the downside, so we're going to be looking for sells to continue the trend of the market. So for this example right here, this is what is the area of resistance would look like, and we're going to be looking to sell. This is, again, very simple, very effective, just to remove all the noise of what the market actually consists of and looks like, right? So it's about a level of support that is going to be used as resistance. So obviously we can tell this market is headed to the downside. So we're just going to simply look to the left, and we're going to see, well, where is this level of support and resistance? So we're going to get our trusty box over here. And then once we get our trusty box, we're going to simply just zone it up at this spot right here. And we're going to drag it to the right. And you guys can see how this is used as support 1, 2, and then 3 times. So this is a valid area of support. And it is used as resistance as well, meaning that this is a valid area of support and resistance. So whenever we're headed to the upside and we're above the zone, we're buying. Whenever we're headed to the downside and we're under the zone, we are selling. That is the simplicity of the trade. So literally the 2 factors that I explained that I look to take my trade, which is trend and sell at resistance, we have that on this trade right here. So let's suppose that we are going to take this trade right here. So in order to execute this trade, we need to now go back to MetaTrader 5 and actually take the trade, right? But before that, we need to see our risk to reward ratio, right? What are we risking versus what are we going to gain? So this is where we come here, I click this button, I drag down the stop loss, we just put around this area. For now, this is all just for example purposes. And then we have the take profit zone right here. So as you guys can see here on the risk to reward ratio button, this tells us where we're going to get out of price if we lose, and this is going to tell us where we're going to get out of price if we win. And it's actually very perfect and very accurate because your risk is calculated, so you never are going to lose more than what you expect to lose because you're going to pre-calculate your risk. And then you're never going to gain more than what you expect to gain because you're going to pre-calculate your gain as well. And this is something that I realize that this is the edge in the market. Once you learn this and once you figure this out, you pretty much have an edge over the market because you know what you're going to risk, and every single time you risk something, you're always going to make more. And that's what this risk to reward ratio is for. So this right here is the risk to reward ratio. So for example, let's say you're risking $10. So in this red box, let's suppose that price goes directly into your stop loss. I mean, from the second you enter the trade, it runs straight into what you were obviously willing to lose.
Every time I try to do something, that alarm goes off.
Price is now going to give you $20 because you have a 1 to 2 risk to reward. So you're risking $10 to gain $20, and that is a positive risk to reward. And this is actually very interesting because you can have a risk to reward pretty much up to whatever you want. I've had trades that hit up to a 1 to 17 risk reward, meaning I risk $10 to then gain $170. So it's very low risk with very, very big gain. So you just keep moving this down, and you can see how the risk to reward ratio.
Feel the muscle just letting go.
Now the risk to reward ratio is a 1 to 4. I keep moving it down.
That blood flow, what I need to,
so
whatever
obviously
it
this varies
is.
based off the take profit zone.
It hurts so good.
Well, for everything. I want you to understand the core of the actual risk to reward and how it works. Because now, when we're going to take this trade and we're going to actually execute it, we have to plug in these numbers right here. So what we're going to do now is we're going to head back over to MetaTrader 5 on the account that we just created together, and we're going to actually execute this trade together in real-time market. So you guys can see right here that there's currently 6 hours and 54 minutes left on this candlestick with 50 seconds, and it's always fluctuating, you know, it's a countdown. And we're real market. We're live right now in the market. It is currently Tuesday morning at 10 a.m. So what we're going to do is we're going to head now to MetaTrader 5, and we're going to take this trade together. All right, so now
Damn. I'm putting all my strength on that right side. Really?
Look at that. This is actually a depiction of a swan. What do you see? What do you feel?
I feel
Alright, so now we're here on MetaTrader 5, we're going to click the app, and then the first thing that's going to pop up is the quotes. Depends where you last left it, doesn't really matter, you can just go back to it, right? So we're going to go to the advanced setting on the MetaTrader 5. So as you can tell, the first currency pair that pops up is your USD, which is the same one that we're analyzing on TradingView. So what you want to do in order to enter this trade is just tap it. So once you tap on that currency pair, it's going to give you different options to enter the trade. So this is where you're going to click the actual trade option. This is where you can click trade, and as soon as you click trade, it's going to give you this option of the euro versus the US dollar. So before we actually plug in the trade and we put the stop loss, take profit, and everything else, we want to see what type of market we want to do. So if we click the little arrow right next to instant execution, it's going to give you different types of market execution. You can use a buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit, all of this stuff. We're going to only use instant execution because we want to enter market immediately now. Right? We want to enter this very second. We want to enter based on what the market is showing us as of right now. So we're going to simply select that option, and that is what I use 100% of the time that I enter the trades in the market. I don't want to put a market limit, I don't want to put a market order. Other people use that, but the way I see it is like if you're going to place a market order in the market, that means you're not entering the trade based off of probability. You're just entering the trade based off of price that gets there. And sometimes price gets there, it doesn't give you your entry signal, doesn't give you your confirmation, so you pretty much just wasted a trade and it wasn't a high probability trade. So for right now, we're going to only use instant execution. Next, we have the lot size. So this right here, you can pretty much put whatever lot size you want. You can put 2 lots, you can put 5 lots, whatever lots you want to put, and this is where you're going to risk actual money on the $5,000 account. So if we actually head back really fast, we have $5,000 on this account. So you want to pre-calculate how much money you're willing to risk from this account to actually take this trade. So once we come here and we click the trade and I go to the lot size, this lot size has to be appropriate to the stop loss. Because in the stop loss, there's points. So let's say there is 20 points, and let's say you have a 5 lot. For the 5 lot, that means you're risking $50 per point. Because the decimal points on the 5 lot, it moves over, so that means you're risking $50 per point. So if you have a 50 lot, and then you have 20 points as your stop loss, that means that we would be risking $1,000 on that trade. Now,
It's got to be the right side, because if I can grab my, if I can do that with my left,
the actual spread that the broker is going to charge you.
It's not that easy on the right.
But the broker is going to charge you money for executing that trade. So it can sometimes be a little bit more, a little bit less, depending on how the actual market conditions are. So actually, before we enter this trade, let's go back to TradingView. Let's set the right risk management so we can come back here and we risk the amount that we're okay with losing. So now we're back in the market. Let's actually calculate the lot size, right? So a lot of people say, what's the right lot size? How do I know which is the right one? And there's never a right one. It always changes because you can always risk a different amount on each trade, if that's what you like. And each lot size is different because each pair is different. This is all going to make so much sense right now. It's really not that complicated. So once you come over here to back to trading, you want to calculate how much you're going to risk. So this is where I always head over to babypips.com, and then I click here on the position size calculator. This literally does all of the work for you. So now that we're in the position size calculator, this literally does all the work for you. It makes it so easy. So we just scroll down a little bit, and then we're going to obviously click the currency type that we have on the account. We're going to just fill out this information. It's going to literally tell us how much we have to risk. It's going to tell us the lot size. It's very easy. So we're going to put the account size right now, and we have a $5,000 account size. So let's say you want to risk a 10% of this account, 5%, 2%, 25%, whatever percent you're okay with risking. Everybody has a completely different risk tolerance. So this is an example. Let's just put 5% that we want to risk. Now, the stop loss, the amount of pips. Pips is point in percentage, also known as points. It's very simple. So what we're going to do is we're going to go back to Euro USD, and we're going to see how many pips is our stop loss. As you guys can see right here, our stop loss is 81 pips. That is how many points we're risking on this trade. And again, we can move this up or down, we can move this up, we can move it down. For this example, let's just make it a solid 51 points or 50 points.
Oh, bro.
So we come here,
if I could sit down,
let's just call it 51 points.
make money,
pips. So this is where we go back to the position size calculator.
make money,
Stop loss, which is what is this zone in the
work
red.
on the body.
We come here and we're going to put 51 points.
I'm going to be unstoppable.
What currency pair are you trading on? Are you trading on your USD? Are you trading on GBP?
Just let me sit here.
So on and so forth. But
Get this money.
Trade on Euro USD.
I'm gonna get this money.
I'm
gonna get this. Every avenue has to be touched on.
It's insane. It's literally telling you the amount of
Every
risk you have
avenue.
to take. It's telling you the position
Except for my blue
standard
hole.
lots, the mid lots, and micro lots. All that matters is the standard lots. Because
I ain't touching no dude.
MetaTrader 5. So in this trade, if this trade goes immediately into the stop loss, you're going to lose $250. And no more. It is impossible to lose more than
I
that.
wish I could be as
Stop.
happy as
You're
you.
obviously losing probably
Man, but
270, 280 because the broker has a spread, they have the fees. That is inevitable. There's no way
this shit
to avoid
feels
it.
so
And
good.
this trade goes into profit, you're then going to make money because you're gonna make $500 because you have a positive risk to reward ratio. So what we do is every single time we take a trade, we come here, we calculate the risk, then we go to MetaTrader 4, MetaTrader 5, and we plug it in. So there's never a right lot
Standard
size.
lot.
There's the same lot size because every single time it's different. All right, so now we hop back onto MetaTrader 5. So you guys can see here, we just go back into MetaTrader 5, and then we have our 5,000.
We gotta really start working on this right foot, this right leg. The left one feels fine.
We pretty much click the Euro USD.
Well, not really, but you know what I'm saying. It feels a lot better than it used to.
So now we go into the lot size, and we erase the current lot size that we have. So we're going to put 0.5, which is exactly what the position size calculator has shown us. Now, this position size calculator has shown us that now we're going to be risking $5 per lot. Why $5 if it says 0.5? Well, because the decimal point always moves 1 point over. So we move the decimal point 1 point over, and it's going to be $5 per lot.
Hold on, what you doing, bro? What you doing? What you doing? What you doing?
Outside because every single time it's different. All right, so now we hop back onto MetaTrader 5. So you guys can see here, we just go back into MetaTrader 5, and then we have our $5,000 account balance. It's the same one as our one that we put in position size calculator. We go back here to quotes. We pretty much click the Euro USD, click trade, becomes ready, and now we're back here at the lot size. So now we go here to the lot size, and then we erase the current lot size that we have. So we're going to put 0.5, which is exactly what the position size calculator has shown us. Now, this position size calculator has shown us that now we're going to be risking $5 per lot. Why $5 if it says 0.5? Well, because the decimal point always moves 1 point over. So we move the decimal point 1 point over, there's going to be $5 per lot. Multiply $5 times 50, it's going to give us the $250 that we're going to risk. Next, we have the actual stop loss. So the stop loss, in order for us to find out, we go back here to trading view, and in trading view, we can see that at the top of the risk to reward ratio, we have our stop loss. So the stop loss point is going to be these red numbers right here. So all we have to do is copy those numbers right there. So you can see it says 1.06065. So we're going to come here to the MetaTrader 5. After we put in the lot size, we're going to go 1.065. So we know that as soon as we put that stop loss price, we'll never break more than that point. So we're never going to lose more than what we're risking. Then next is going to be our take profit, and our take profit is going to be this line right here.
Oh, that's what that all it is.
1.0. So it'd be 1.03892. So 1.03892. And now we click sell or buy. Obviously, we know that the majority of the market is heading to the downside, so we're going to simply take a sell position on this trade. And as soon as we click this sell button, literally, the moment we click sell, we're going to be executed into the real market. There's just something about this noise every single time that it just excites me because it means that we're in, we're trading, we're live, right? So as soon as you click the button, so it makes that noise, and then you actually enter the trade. So right now, we're being executed into the market.
That's a regular crypto sound.
$4 down in price. And you can always consider that every single time you take a trade, you're going to be down about a couple dollars, depends on your lot size, because the broker has to charge the fee. They have to charge the spread. That's how they make money.
Yeah, so it's crypto.
They're doing us in order to execute us into the real markets. So now we're obviously in this market, and we pretty much what we would do is set and forget. We would let this trade ride to our take profit, or we would let the trade ride to our stop loss, whichever one gets hit first. But now for this example purposes, we're going to close out the trade. Because in real time, if this market hits a stop loss or hits a take profit, it will take us out of the position for us. That's why we put the stop loss, that's why we put the take profit. But for this example, we're going to take out ourselves of the trade. So all we have to do is we have to just simply hold the Euro USD option, because if you tap it, this is going to happen. So you can tap it or hold it, doesn't matter. So for this example, we're just going to tap it, and it's going to say close position, modify trade, depth of market chart. The only button we care about is close the position. It's the only button I ever really use. And as soon as you click close position, it's going to close you out immediately of this position. So as soon as you click close.
Oh, I'm about to go try my shit right now after this. I think she put me on active though, so I'm not ready for that yet.
And then you have accepted for that price to then do that. So now you can see that our current balance is down by $2, so pretty much still break even. In order for us to see the trade that we took and what we've done, we go to the history section, and you can see how it's now minus $2 on the Euro USD trade that we have just taken. And we've done it. We've literally analyzed the market together. We've spotted an area of support and resistance. We've identified a trend that's been heading to the downside. We entered at an area of resistance that is used as support or resistance to then sell. We've gone to the MetaTrader. We've created an account. We've been able to now identify the market. We've been able to put our lot size. We've been able to calculate our risk. We've been able to execute the trade and close the trade. We've done it all. Obviously, this is just a very beginner, very first step. So we've done everything to make money in the markets. Now, let's say instead of losing those $2, let's say we would have made $10 on this trade. What do I do? How do I withdraw the money? How do I get it out of this MetaTrader 5 platform? Well, it's very easy. The MetaTrader 5 platform is connected to the broker. It's an extension of the broker. It is what connects you to the real market. So that money right there is technically not yours as of right now. It is in
until you sell it.
So all you have to do is go to your broker, and then you simply just request withdrawal. Orlando is going to give you withdrawal straight back into your bank account. All you have to do is just plug in your bank details, and then it's going to get you back there. There's other platforms that have crypto withdrawals and then crypto deposit, so you can just pretty much plug in your Bitcoin address or your USDT address, and the money goes right into your crypto address, and then you do whatever you want with it there. But first, you have to take the money out of the MetaTrader 5 platform, and this is an option that the broker is going to give you. So now let's say that we would have made $10 on this $5,000. So that means we would have made up $10. So we would have a total balance of $5,010. So that's where you go onto the broker, and then you would click withdraw of those $10. So you're going to remove $10 from this account. Once you remove $10 from the account, the balance on the MetaTrader goes back to the starting balance of $5,000. Now you have these $10,000 in your wallet inside your broker account. Doesn't matter what happens to these $5,000 on MetaTrader 5. Doesn't matter if you blow it or if you make more money. Those $10 on your broker account are safe. They're not moving because they're withdrawn from the market. Now they're stored in a bank account within the broker platform. Now what you have to do is you have to go to this platform, and then you have to request to withdraw that money into your bank account. Every single broker has a different way to do it, but then they will all inevitably end up to you because those are your realized gains. And that's it. So it is extremely easy to withdraw your profits from the market. So now, what if you don't actually have $5,000 to get started? So you deposit into your account, and you can make those $10 and obviously much, much more. Well, there's funding. This is what I mentioned at the beginning of the video, which you can actually use other people's money to make money in trading. So there's many funding companies out there, but I only and will forever recommend Rocket 21. Rocket 21 literally has the best platform in order for you to be able to go take the evaluation process. You have the easiest one-step evaluation process in the world. You have the easiest two-step evaluation process in the world.
Got you.
No time limit.
Got
so
it.
You can take all of the time that you want.
Got it.
So what Rocket 21 offers, and many other companies out there in the industry, it is access to funds that are not
out of my league.
any risk. So let's say you want to seek a $5,000 account that Rocket 21 has to
Yeah.
offer, because it is the only platform that offers a $5,000 account to start off with. Instead of you actually having to deposit $5,000 into an account, you just buy a challenge. The challenge will cost you $100. And instead of you putting $100 into a platform and then using that,
Yo, I'm not gonna sit down ever in a chair unless it's like zero gravity.
You can make much more profits with that money, because that way you're using other people's money to make money in the markets. And as soon as you pass the evaluation process, you get the $100 that you get for the challenge back. Now you're literally free in the market. So you have $5,000 free, and you have literally access to do whatever you want with it. So you don't have to use your own money. You don't have access to, let's say, multiple thousands of dollars. There's many different types of funding companies out there that offer funding. And this funding is the reason why I am here today, because I got a payout about 3.5 years ago where I literally got $28,000 from a funding company, and that made me enough cushion so I can leave my job and I can literally just focus on trading full time. I didn't have one to start off with. I kept trying it with small accounts, and I kept blowing the account. And the way that I actually was able to become profitable was by seeking funding. So this is a new version of trading that is taking over and is making trades profitable month after month and year after year. So that's it for this video, right? Very simple, very straightforward video. And I hope you guys can now go into the market and take your trade. But if you want to become like one of my students that they're able to generate anywhere from $1,000 to $1,500 a week using my set and forget strategy in the first 3 months, click the link in the description below. I have a video for you there that explains what set and forget actually consists of. How hundreds, if not thousands, of my students are been able to now leave their job and retire early. How people that have full-time jobs are able to make a living off of trading and also go to their full-time job and just use it as a side hustle and make extra income. So you want to know more about what the set and forget strategy is, what it consists of, and how it lets hundreds, if not I think thousands of traders generate anywhere from $1,000 to $1,500 a week as a beginner trader. I'm telling you, just click the link in the description below. There's a video that explains everything in a lot more detail, because it simplifies not only what I explained to you in this video, but it goes into more detail on what set and forget is and how it's allowed you to become financially free, pretty much trade from anywhere in the world and change people's lives every single day. So I appreciate you guys watching this video all the way to the end. Make sure you guys click the link in the description, and I'll see you guys in the next video.
This is it. Touch you down. I mean, before I get over there.
Oh, come on. We came from every corner of the country.
You either die a hero or live long enough to be a villain. And in the case of Steve Harvey,
Steve Harvey was a jackass.
Because I feel like we are officially in the exposed Steve Harvey era. Like before the Cat Williams and Shannon Sharp interview, Steve Harvey's biggest stripe on his legacy was his go-digging wife for a discount he paid to Monique on his show.
I've done nothing wrong. When you tell the truth, you have to deal with the repercussions of the truth. We black out here. We can't come out here and do it any kind of way we want to. Your husband can't be the Sydney that he really is out here. Let me tell you nothing. That flexing, we gotta flex a different way. We out here in a game. This the money game. This ain't the black man's game. This ain't the white man's game. It's the money game. But we in the money game. And you will not sacrifice yourself. The best thing you can do before I let you run. You cannot help the money game. But let me tell you what the game is. Before the money game. Before the money game, it's called the integrity game. And we've lost the integrity worrying about the money. One more. Wait a minute. If I crumble, if my children crumble, my grandchildren crumble, I cannot, for the sake of my integrity, stand up here and let everybody that's counting on me crumble so I can make a statement.
Facts.
There are ways to win the
Openly admitting to selling out your integrity for a check was a wild